In recent news, Nvidia, a 31-year-old chip maker, briefly surged past tech giants, Apple and Microsoft, to become the world's most valuable company, reflecting the shifting landscape of the artificial intelligence (AI) industry. This milestone underscores Nvidia's pivotal role in the emerging AI economy, driven by unprecedented demand for its graphics processing units, GPUs, which are essential for building large AI systems used by major tech companies like Meta and Microsoft. Adam, a 44-year-old hospitality worker from London, is an example of the growing public interest in Nvidia. Having only invested in one other company before, Adam decided to buy Nvidia shares last month after a tip from a friend. Despite struggling to remember the company's name and what it exactly does in AI, Adam recognized the potential of AI technology. "It's AI and clearly there's money in that," he says, likening Nvidia to the fictional Cyberdyne systems from the Terminator movies. Adam's investment decision, despite his limited understanding, highlights how Nvidia is capturing the popular imagination, not just the attention of Wall Street. Nvidia's stock price has skyrocketed by around 700% since the launch of OpenAI's ChatGPT chatbot in November 2022. This explosive growth reflects the broader AI fervor that has gripped both Silicon Valley and Wall Street. However, Nvidia's brief tenure as the world's most valuable company and its quick return to third place underscore the intense competition in the AI sector. This surge in Nvidia's stock is a microcosm of the AI economy, marked by rapid growth, investor appeal, and an unpredictable future. The last time a relatively obscure company like Nvidia held such a position was in March 2000, when Cisco, a networking gear manufacturer, briefly overtook Microsoft during the dot-com bubble. Companies then, like now, poured billions into building infrastructure for a promised revolution in computing and the global economy. Cisco's fall after the bubble burst serves as a cautionary tale, as its stock price has never returned to its 2000 peak. Skepticism and comparisons to the dot-com bubble rise often. The comparison to Cisco raises concerns about whether the current AI investment boom might also end in a burst bubble. The capital surge into AI by big tech companies is driven more by revenue projections than actual returns, stoking fears of a repeat of history. However, Bernstein analyst Stacy Rasgon points out significant differences. Unlike Cisco, which built out capacity based on hoped-for demand, Nvidia's shares trade at a much lower multiple of forecast earnings. Companies like Microsoft are already reaping some benefits from their AI chip investments, although others like Meta caution that it will take longer to see returns. Rasgon suggests that while an AI bubble might be forming, its burst does not appear imminent. Nvidia's business model differs significantly from that of consumer tech giants like Apple. Instead of selling millions of affordable devices to the masses, Nvidia sells a relatively small number of expensive AI chips for data centers. Large cloud computing providers such as Microsoft, Amazon, and Google accounted for nearly half of Nvidia's data center revenues. In 2023, Nvidia sold 3.76 million GPU chips for data centers, capturing a 72% market share and leaving rivals like Intel and AMD far behind. Nvidia's revenue grew 262% year-over-year to $26 billion in its most recent quarter, a growth rate even faster than Apple's in the early years of the iPhone. The demand for Nvidia's products is driven by tech companies seeking to advance machine intelligence capabilities. Companies like OpenAI, Microsoft, Meta, and Elon Musk's xAI are racing to build supercomputers by connecting up to 100,000 AI chips, creating data centers 3 times larger than today's biggest clusters. These server farms cost $4 billion in hardware alone, according to chip consultancy SemiAnalysis. Nvidia's CEO, Jensen Huang, predicts that more than $1 trillion will be spent on retooling existing data centers and building AI factories in the coming years. However, this level of investment will only continue if Nvidia's customers can figure out how to monetize AI. As Nvidia reached the top of the stock market, some Silicon Valley insiders began questioning whether AI can live up to the hype. David Kahn, a partner at Sequoia, warned of a speculative frenzy around AI and the delusion of getting rich quickly from advanced AI and Nvidia chips. Despite his belief in AI's economic potential, Kahn estimates that big tech companies will need to generate hundreds of billions of dollars more annually to recoup their AI infrastructure investments. To sustain its growth, Nvidia must emulate companies like Apple by developing a robust software platform. Huang argues that Nvidia is more than just a chip company. It provides all the components to build an entire supercomputer, including chips, networking equipment, and its CUDA software, which enables AI applications to interact with its chips. Nvidia's recent launch of Nvidia Inference Microservices, NIM, aims to simplify AI deployment across various industries, further cementing its software ecosystem. Historically, Nvidia has provided its software for free, but it now plans to charge businesses $400-500 per GPU per year to deploy Nvidia AI Enterprise. This move is crucial for attracting more corporate and government customers that lack the in-house AI expertise of big tech companies. However, Nvidia faces competition from its biggest customers, who are also building their own AI platforms and custom chips. Google's Tensor Processing Unit, TPU, and similar chips from Amazon and Microsoft show that these companies can potentially reduce their reliance on Nvidia. To mitigate dependence on a few large customers, Nvidia is investing in AI startups and cloud computing providers like Lambda Labs and CoreWeave. These partnerships not only offer financial returns, but also provide Nvidia with early insights into emerging AI trends, helping shape its product development. In the past 2 months alone, Nvidia has participated in significant funding rounds for companies like Scale AI and Mistral, further embedding itself in the AI tech ecosystem. Nvidia has struck 116 such deals over the past 5 years. Taking stakes in startups gives Nvidia a front-row seat to the next generation of AI, informing its own product roadmap. Huang is neck-deep in details about AI trends and what they could mean, says Kanjun Qiu, CEO of AI research lab Imbu, which Nvidia backed last year. He's built a huge team to work with AI labs directly, so he can understand what they're trying to build, even though they aren't his customers. Nvidia's journey to the forefront of the AI boom has been marked by significant challenges and near-death experiences, as acknowledged by CEO Jensen Huang. In the competitive and rapidly evolving tech market, Nvidia's future success hinges on its ability to innovate and adapt. The company's continued growth and dominance in the AI sector will depend on its ability to build and maintain a robust software ecosystem, navigate competition from its largest customers, and capitalize on emerging AI trends through strategic investments and partnerships. As Nvidia navigates this dynamic landscape, its actions will likely shape the trajectory of the new AI economy. Thanks for watching. If you enjoyed this video, please hit the like button and subscribe for more updates on AI and financial news.